All right, guys. This video is going to be a little bit more short, kind of more to the point, but I'm going to be walking through you guys how I, establish my narrative and how to catch high probability turtle soups as a result of that narrative. So as you can see here, here's an execution that I took during the week on, I believe this was Tuesday? Yeah, Tuesday. So right here, this is a turtle soup entry that I did after we had swept out these lows. And how I find my high probability entries is very simple, but at the same time, you have to have an eye for it, right? So I've been trading for about, I think this January will be a full year of me trading ICT concepts. So I've been trading almost pretty much every single day for the past year, and I'm pretty, I have a good eye for catching turtle soups because it's something that will increase your win rate way more than you would really think it would. So it's everything. How do I say this? We'll establish some things real quick. So the two things that you need to know to spot a turtle soup is you need to understand narrative. So in order to understand the narrative, you need to understand why would price want to take out some sort of low, right? So in this case, we can understand that a lot of the turtle soups are going to be the start of a breaker, or it will be the start of the best probability breaker blocks that you will see in the markets. And I'll go through a few chart examples. But narrative is very important in understanding turtle soups and why price would move after sweeping a low. And it also is how well you can spot the manipulation, because a lot of people, there's going to be times where the market's going to consolidate, right? It'll go up and down like this. And then the market will move down here, and then it'll move up again. And people think that this high getting swept is the manipulation, because all they're worried about is they're trading the pattern, right? They're trading the turtle soup pattern. Okay, sweep above a high into a PD array. Let's say there was like a BISI right up here, right? But what you didn't realize is that while price was accumulating, it was accumulating probably over some sort of liquidity pool, which can be a low formed during London, or it can be a PD array or high time frame PD array that's being traded into to establish the turtle soup. So right here, this would be your turtle soup, your low risk buy. And in my last video, there's an execution at the end, I believe, and that goes over some more examples of me, catching turtle soups. I don't always catch them half the time, but they are very important to understand. So if we'll go back to the chart right here, you can see that this example I'll show later right here was I bought right below here after we had swept out these lows. So price is accumulating. All right, price then sweeps this low inside of a PD array order block. It goes into this wick, but most likely this order block, inverse fair value gap, whatever it is, it's going, not like I just said, this is going to be the manipulation. Everyone is thinking that this was a part of the accumulation, this low being swept, and people are going to go short here above this high inside of this order block, right? If you don't understand how the manipulation works. So another example is my weekly analysis that I did on, I believe it was Monday, right? So I predicted this would be a future breaker, and then I also predicted that we would go into the previous week equilibrium and turtle soup it and continue higher into the week one high and towards the previous monthly high. So what you can see is that's exactly what we did. If you go on the 4 hour, I'll show you guys on my chart. And just delete all this stuff, right? Hold on. So right here, you can see previous week equilibrium, and this happened at 10 a.m. on Wednesday. This was the breaker that I was anticipating, although it didn't really move that cleanly. It's still considered a breaker block, right? You have a high or low, high, lower, low, higher, high, low, high, lower, low, higher, high. Yep, sweep it. And this is where you can catch the most high probability turtle soups. Usually, turtle soups, every single turtle soup is the start of a high probability breaker, right? Your best entries in a turtle soup are going to be some sort of liquidity that is swept in the opposite direction. So right here you can see, okay, right here we have 825, right? This right here we can also help use our establish our bias, is we can help with time-based liquidity and true open. So this candle right here is the 830 open, right? On the 830 open, it doesn't really get traded much into, but you can see that every single time we dip below this candle's open, you can notice some sort of price displacing in the opposite direction, right? So you can see right here, we sweep a low, this candle's low right here, and then we go towards the buy side liquidity. So this is also a breaker, high, we have a low, high, lower low, higher high, and then you can even see it will play out as this fair value gap forms. We trade inside the fair value gap, and then we sweep this high, right? But that's not what I wanted to cover. I want to cover how 930 and 830 can help you establish. So right here, again, this is our 930 candle open. As you can see, price trades above it right here, creating the 930. This is our 930 Judas swing, right? So this takes out some form of sell stops right here. So this sell stop, and these candles right here, right? So you can see how basically every single high probability breaker will start with a form of a turtle soup, right? So low, high, lower low, higher high. This high probability breaker starts right here when we sweep this candle's low, and then when we inverse this fair value gap, that is what is our breaker block. And then under, we also can see the narrative, right? Why does price, it's not just about trading the pattern and trying to buy and sell below every high and low, right? It's about the narrative that happens. So this is the 830 open. This is the 930 open. I'll make it more clear, right? 930, right? This is going to be a time where the market will sometimes consolidate if we have a large overnight move, right, on London. So right here you can see that price kind of just expands, but it's still in an accumulatory state. And then we also, during London, we get this displacement down, which is our manipulation. But then as you can also see right here, we have another room for manipulation where every single one of these breakers will start at some point of a turtle soup, right? So if we go on the 1 minute and we go back until here, you can see that at 9, it's usually time, right? So at 9:50, the macro price is going to do one of two things. It's either going to sweep an area of liquidity, or it is going to reach for a external target, right? So right here, it sweeps this short-term low. Right here, this is just your swing. So you have your low, high, lower low. This is your turtle soup right here. When you see price get swept multiple times, at one point during a exact time is when your best entries will come, right? And over here, every single high probability breaker, I want you to study breakers. I want you to see what happens at every single high probability breaker. It doesn't even need to close. We don't want this candle to actually close below, right? All we want it to do is we want it to displace, manipulate everybody, take out people who have long stop loss orders placed up below this low, right? And what we're looking for is this kind of move down during a macro, a kill zone, under 830, under 930. That is our narrative. That establishes why price is going higher. When we are under these opens, a lot of people have their limit orders, their sell limit orders above here, thinking that this was this price right here is the move up. This is the manipulation. But in actuality, they never really looked at the time. Right here, this is the start of the 930 Judas. So you see price come down here, sweep out all of this accumulation, right? So we have your accumulation, manipulation, and then we get another manipulation below a low, and then we continue higher, right? Same thing right here. We have a low, right? I'm not trying to cherry pick these with you, but these are just examples that I've seen throughout intraday charts, right? Another one, low, high, lower low, higher high. Even if this breaker doesn't work, it's still it's because we just didn't have the narrative in context. But you can also see right here that we have the same thing. Price makes equal highs with this, doesn't quite sweep it, but right here, this is going to be your turtle soup. Every single breaker starts with turtle soup. Every single time PD array, turtle soup basically validates PD arrays. The reason why PD arrays work is because price is, let me show you guys an example, right? This is a fair value gap. We can all assume this is a fair value gap, right? So this low right here, these lows are part of this fair value gap. This is the high of the fair value gap, but is also a low in the market, right? Every bullish candle starts off bearish in some way, so it's going to print that low. The reason why this PD array works is because we are sweeping an area of liquidity inside of this PD array, and then we are continuing higher, right? Everything starts with a turtle soup. It is probably the most low risk entry model that you can use in almost anything. Again, right here, right? The reason why this works is because you have a lot of people that are looking to buy the breakout right here, but what happens is the narrative is not established, right? So we need to understand why price is going to sweep this high, and it is because it is a relative equal high, but it also is going, usually your best turtle soups are going to happen in a PD array of some sort. So these consecutive candles, order block, you know, but it not always will you get it. But again, right here, right? So right here we have, let's see. Okay, so yeah, right here you can see this is another area, right? At the same time, this is going to be the 950 macro, which is where you're going to look for the most highest entry turtle soups and also the highest probability breaker blocks that form and a change in the state of delivery, right? So you can see that we have one low gets swept, one low gets swept, and then another. 3 lows get swept. So which one's next, right? This low is going to be the one that gets swept inside of this macro at around 10 a.m., right? What I want you guys to notice when you're looking through your breakers is I want you to notice why does it sweep this area first? Why would it, even if it does close below, there's a reason that price is going to head this way, right? So we'll go on the 5-minute. And as you can see, I mean, there's not really many PD arrays right here, but we are in a high time frame key level, which is the previous weekly equilibrium, which is where my targets were. So you can assume that when we have this big down move, we have our accumulation. So this is our, London accumulation, right? We have this high, and then we have this low created. So we're working inside of this dealing range. When this candle's low and then the next time switches to 10 a.m., we can assume that 10 a.m. is going to give us a reversal of some sort and then a change in the state of delivery, right? So you want to look for the candle that dug into the low. So this candle right here, we get, once this candle closes above this candle, we get our change in the state of delivery. So if you're not good at just catching the low, or you're too hesitant to trade this considering it might go lower, what I want you to do is you can wait for the change in the state of delivery. So when this candle gets closed above, and you can have your limit order set right here and get your target up to these highs, right? We also ran, this is just an example in terms of why the turtle soup works, is because we're at a key level. We are working inside of a higher time frame dealing range. We have our accumulation, and then we get our accumulation right here, and then manipulation during 9:30. This is our Judas. Again, the 9:30 Judas is going to displace in a way until it goes into a key level. So in this case, our key level was that this line right here is our previous week equilibrium, which was where I was looking for longs, right? And I'll show you guys my executions right here that I took, even on paper, right? I went long in here as well. And you can see that these turtle soups are very high probability only at the key time and at a key level. You can't just think of it as a pattern where, okay, if we sweep this low, we're going to look to go up higher. No, it has to be some sort of key level. There has to be some narrative that establishes it, and there has to be some kind of reason why the market should go higher. So this is the only reason why turtle soups work, essentially. And then if you are really confident and you have backtested turtle souping enough where you can take your entry right here, it doesn't even have to be right here. It can be at any kind of inverse for value gap, any kind of change in the state of delivery that I showed you guys on the 5-minute right here. So once you see some kind of up candle movement, then that's how you know that you can get in on a buy, right? Same thing here, right? Again, we don't print this. We have a failure swing, so that means we know the market's going to go lower. And then where does this start? It all starts with the turtle soup. Oops, wrong candle. So if we're going to, kind of just take a lesson in this, I know this is hindsight, but I do have examples of me trading this live, and you guys can watch them and you can learn what my mindset is that, you're going to find, once you see that this candle displaces in the opposite direction at a key time, so as you can see, this is towards the 11:45, 11:50 macro. Again, we have another one right here, turtle soup, right? And this is during 1 o'clock, so during the I believe this is, yeah. So this was about during the macro time, but there's also during when lunch hour ends. So as you can see, we have lunch hour high, right? This is also a time-based liquidity. So we can assume that when lunch hour comes to a close, we're going to be seeking the liquidity that is formed within that lunch hour, right? So this is the lunch hour high at 12:10. Then we print our low, so high, low, higher high, lower low. Notice how every single high probability breaker starts and ends with a turtle soup. This right here ends with a turtle soup again. We have a sweep of this low, change in state of delivery, price then comes back, trades back into this candle, and then we deliver higher, right? And I'm pretty sure I also have this as well. Yeah, so I did take my entries here as well, so you can see if we go down to the 2-minute. Hold on. Yeah, so as you can see, we have another, how ICT likes to call it, 3 drives, I guess you could call it. But when you see 1, 2, 3 areas swept, even look at all of this, right? You can see that this is price accumulating downwards. We hit a key level, such as this order block right here, this order block, right? And also this fair value gap that doesn't really get violated as much, but it closes through it pretty big. There needs to be some sort of key level, and there needs to also be some sort of reason why, as I said, the market should reprice higher. But right here, you can see I also took my other entries, short entries up here, at this turtle soup, even before it happened, right? We'll turn these off. But essentially, what you need to understand how to establish a turtle soup is you need to understand the market structure and the reason why it should change, right? Once we shift above this candle, that's when our buy program starts. This is the formation of the order block. So you get your low swept, formation of the order block, fair value gap, breaker, and then you get your entry inside of the breaker after the fair value gap. And then what I'm just trying to show you guys is just try to show you, open your eyes to, understanding how the turtle soup really works. Again, we have another example. This low gets swept, this low gets swept. Now what's next? After this low gets swept inside of this order block, right, there needs to be some kind of PD array. Like I said, this is what validates PD arrays. These lows are getting taken out inside of a PD array, accumulating orders inside of an order block, or how you like to call it, demand zone. And then once we get our shift above this candle, the one that dug into all of these lows, that's how we can also initiate our buy program. And then you can see we have 1, 2, 3 highs that we're aiming for. So you can have your take profit set at this high, take profit set at this high, and take profit set at this high. So that's just a little bit something about turtle soups that I think you guys should really open your eyes to, as ICT likes to call it, one of the most algorithmic entries that you can have. And almost every single move, every single reversal, every single retracement, it all starts with some sort of a turtle soup. Again, right here, this is an example from today. I'm not cherry picking. I'm just going through the charts, right? Right here, we have this low, right? We're accumulating orders above right here, and this is our 930 open. So this is our 930 right here. 930, so you can see 930 open right here. We get our up move, accumulation, manipulation below 930, and what else? Where is our 830 candle? Right here, below 830, right? So this establishes our narrative again. This is basically my entry model. This is what I look for in the markets every single day. I look for some kind of accumulation during the 930 to 950 time, because usually if we have a large overnight move like we did here, then you can assume that seek and destroy conditions, or time distortion as ICT likes to call it, the accumulation of orders during open, right? There's not as much injection of volatility here because the market is accumulating and they're going at a later time to take out people in the marketplace, right? So you can see the same narrative. We are under 930 open. We are under 830 open. We have just swept a low. And notice the breaker. Low, high, lower low, higher high. It all starts right here when we soup this low. And then when we create SMT with ES, bullish SMT like that, right? So this is another way that you guys can seriously, understand and look at the markets in a different perspective, that true opens, time-based liquidity is going to be very important in understanding the turtle soup and the reason why it works. Again, the reason why this fair value gap is validated is because there's a low inside of it, so it makes it a high probability liquidity pool. And then we soup the low below the 930 open, right? So this is going to be your manipulation. Everybody thinks it's going lower. They think that this was the manipulation above this high, which you could trade, right? This also works as well, because your high, low, higher high, lower low, trade back into it, and then you get your dump down to 930. But I'm mostly looking for in between the macro 950, so 950 macro starts, right? We get our A, B, C leg printed, right? So this is going to initiate our buy program once we close above this candle and once we close through this inverse fair value gap. And notice how it gets traded back into, and it doesn't ever leave this inverse fair value gap. So this also helps you with understanding, the context of why the market should reprice higher, not based on some pattern. You can't just do it with every single low and high. Like I said, there needs to be time element. There needs to be true opens, time-based liquidity elements, because right at the end of these days, these candles are liquidity, right? The reason why it never gets traded back into until here is because the market is looking for a specific time to take out that liquidity, right? Because you guys could have both bought right here, but if your low is right, if your stop loss is right here, you could have seen this as your 2022 model. Okay, we have a low, we swept this low fair value gap. we're going to go higher, but you need to understand that these macros are meant to do one thing specifically, and it's meant to go for liquidity, and it's going to always, if not the most high probability, go under the open of the New York session or the open of the New York Stock Exchange, which is 9:30. That's when the market's open, or it'll go to pre-market open at 8:30, right? So what you want to do is you want to establish a narrative or establish a model around it that helps you understand, the time-based elements to it, right? This is our 10-10 macro. Notice how this small bit of price action is all you need to trade. That's it. You need to look for some sort of sell-side liquidity, buy-side liquidity target, and you need to understand that, the market's going to reprice higher once we see these elements in place. So let's go over the framework of how to catch a high probability turtle soup. So how to catch a high probability turtle soup. So what we're going to do is we're going to establish a window of time, right? Let's just assume that this is our macro, right? Doesn't matter. I'm just going to assume it, right? So the first thing we're going to need is engineered or time-based liquidity. That is going to be the first thing you are going to look for. Are we in a consolidatory market? Are we sweeping? Are we kind of just going back and forth? Are we building liquidity? Like I said, when you see the market, like I said, hold on, where's the example? When you see the market taking out these, so many lows and, leaving so many swing highs, then you can understand that this is engineered liquidity. Like I said, you have it right here, your turtle soup, and you have all these unengineered swing points, right? Because the market is either taking liquidity or it is engineering liquidity, right? So you need to understand that, right? So you need to have engineered or time-based liquidity to right time, right? You need to make sure that this is in the right time, right? You need to make sure that it's either in a kill zone, silver bullet, whether it's 2 p.m. to 3 p.m., whether it's 10 a.m. to 11 a.m. There needs to be the right time, and I'm not going to stress this because this is why a lot of you guys lose your trades, is because you're not trading with the right time, and you're not understanding the narrative that's supposed to happen within that time, and you haven't studied how macros deliver at all, right? So it needs to be in the right time, right? And then we need to see a displacement in the opposite direction than the engineered or time-based liquidity pool, right? We need to see a displacement, a sharp energetic move, and then a quick move back into the range after we see it, right? So right here, we get our displacement prices displacing right through these lows below the 930, and then it's only wicking below. Notice, we don't want this to close below. We want it to wick, or we want it to have some sort of small closure below, and we also want to see it, quickly turn back and come back into this range, right? This is all built up liquidity. These highs, failure swing highs, this is all engineered liquidity. So we want to see price displace in the opposite direction, take out some form of sell side, and then move back into the range and then towards our external range targets or unmitigated highs right here, right? So that's also what we want to see. And then for a key level such as true opens 9:30, midnight, 8:30, or equilibrium, previous week highs and lows, previous day highs and lows. We want to see, we want to see stuff like that. We want to see a key level such as true open 9:30, midnight, 8:30, or equilibrium of previous week highs and lows, right? And then if you don't get the turtle soup entry, you can enter on a CISD, change in state of delivery, or order block formation. All right, that is going to be your 5 components. So how to catch a high probability turtle soup: engineered time-based liquidity, right time, like I said, macros, kill zones. You want to see displacement in the opposite direction, our manipulation, then the engineered liquidity or time-based liquidity pool. And then fourth, you want to see it come into a level such as a true open, below 9:30 open, below midnight, below 8:30, or in an equilibrium, previous week highs and lows, previous week equilibrium, previous monthly. It works, all of that kind of stuff. You want to see that area get hit, whether, or here we'll put in, or PDAs. So you also want to see, maybe it come into a fair value gap that's in a discount, or maybe you want to see it come into an order block that's in a discount. Mitigation, if you're going short and you want to look for a turtle soup, you want to see a high that's near a mitigation block, or something like that to help you kind of confirm that bias. And then if you're like, if you don't have enough experience trading turtle soups, you don't have enough experience, with confidence in yourself and with your strategy, and you can wait for changes to the delivery or an order block formation, and that also works as a entry. But that's pretty much going to be it for today. If you guys have any questions, I would definitely, you can leave them in the comments. You can DM me on Twitter. All of that stuff works, and I hope you guys have a good day.